Good morning. Thank you for joining us for this Maryland Mortgage Program webinar. This webinar is part of the 2019 Maryland Association of Realtors webinar Thursday series and one of the free Maryland Realtor benefits. Today's webinar will be recorded and available on our website late next week. Our presenter this morning is Ms. Terry Catalano with Maryland Department of Housing and Community Development. This morning, our presenter is going to give you a review of the Maryland Mortgage Program updates and highlights, including the Maryland Home Credit Program, Mortgage Credit Certificates, and the Maryland Smart Buy Student Debt Initiative, as well as significant program changes and new offerings. Please feel free to ask questions throughout the presentation. Thank you, and let's begin.
Good morning, everyone. Hope everyone's having a wonderful day. Thank you, Cecilia, for getting us set up this morning. This is Terry Catalano, and I'm here with the Maryland Mortgage Program. A lot of you have seen me. I go all over the state for the Maryland Mortgage Program, training realtors so that realtors know all these programs and can have a lot of other tools in their tool chest to get their spring market on the up and swing. I hope everything we tell you today helps you get going and get you excited about this spring market. It is an exciting spring market, and we've got so many new products to tell you about. The Maryland Mortgage Program used to just be that $5,000 program. And as of this year, we've gotten so many other programs that really help to get you started. Hold on, I'm trying to get to the next slide. So the first thing we're going to talk about is these are 30-year fixed rate mortgages. These are VA, FHA, USDA, and conventional loan products. These are all done through an approved lender. The approved lender would do the first trust. They would send it over to CDA, to Maryland Mortgage Program, and Maryland Mortgage Program would then take about 48 hours if there's no conditions and get the rest of it through. We're having a hard time getting to the next slide, but I'm going to keep trying. So again, these are 30-year fixed rate mortgages, VA, FHA, USDA, and conventional loan products, all done through an approved lender. So I want you guys to understand that MARA has now an HOC classes that are offered. These are housing opportunity certificates. They are done a 4-class series. They're done in every county. Your name after you take this series would then go on the MAR website. When people call into MAR for any kind of information on first-time homebuyers or homebuyers, you would be on that referral list. So again, we're the Community Development Administration, which is the housing finance agency for the state of Maryland. And we offer a lot of different programs. We offer grant programs. The Maryland Mortgage Program offers grant programs now, low interest rate programs. They have student loan programs, disability programs, a lot of different programs to help you get going in everything that you need to do. Again, 30-year fixed rate mortgages, a flexibility of lenders statewide. There is about 100 approved lenders. It's not easy to become a Maryland Mortgage Program approved lender. They really have to jump through a lot of hoops. And it's primarily for down payment and closing cost assistance. And for Maryland Credit Certificates, I'm going to talk about those too. These are down payment and closing cost loans. They have a 0% interest loan for the deferred of the life of the loan. Again, if you look at a visual of my left hand is a bucket. That would be a 0% interest loan bucket. It does not get paid back till the property is sold, refinanced, or the loan is closed out. Remember that bucket right there. DPA grants are outright grants. When I talk about grants, they are forgiven at closing. Some products don't have down payment and closing cost assistance, but they usually have lower interest rates. And I'm going to talk about our low interest rate programs too, because those are the new programs, and those are your money makers right there. I hope everybody's with me. I'm going to talk about the Partner Match program. So our Partner Match program you can use with either one of our $5,000 programs. Partner Match is where builder developers jurisdictions and employers have come to the state of Maryland and they have signed on to be partners. Whatever they give your buyer, Maryland will match up to $2,500 one time. So employers, we all know they have, if they're our partners, they will give your buyer money to move maybe closer to home. Jurisdictions have products and they sometimes go through the Department of Housing and they are partners and they will give your buyer money so maybe they move into the county. Builders, we know builders give money if they are our partners. Whatever they give, we match. All that money can go together for down payment and closing cost assistance. So let's say we're going to do an employer scenario. So let's say in that right-hand bucket, you have $5,000 for down payment and closing cost assistance from the Maryland Mortgage Program. Remember that $5,000 is a 0% interest loan. It does not get paid back to the property is sold, refinanced, or the loan is closed out. In that right-hand bucket, you would have your partner money. Maybe the employer is giving them money. Whatever money that gets, whether that gets paid back is between the partner and the borrower. Remember that payback bucket? Maryland would then match whatever that other bucket that the partner was giving up to $2,500. You would put all that together and that would go for down payment and closing cost assistance. You could then use seller concessions with that. If you're using employer money, you could still use jurisdictional money with that. If you look at the next slide, you'll see one scenario of how that stacks up. Remember when I told you that the program, you have to go through an approved lender? The other condition of the product is you have to do homebuyer education. Home-buying education used to be pretty cumbersome. Sometimes in some of the jurisdictions you had to do before contract, and then you would have to do a face-to-face. That is no longer the case. All home buying education now can be done online. It's huge for our industry, huge. If they are doing a Baltimore product or they are doing a jurisdictional product, whatever their rules and regs for that product is would have to be adhered to. But if they're just doing a Maryland Mortgage Program product, they can do it online. They would get a certificate, and that certificate must be less than 12 months old. It's always my suggestion that if you have a buyer and they said, oh, I did that, I have the certificate, that you look at that certificate and make sure that it is less than 12 months old or will be at settlement. I'm going to talk about our website for just a second, and then I'm going to go back to the website. I always suggest in my classes that you put this website in your phone. And I'll tell you, because all this information we misplace, we can't find, and then we run into a first-time home buyer or a buyer, and we say, when are you thinking about buying a home? And they say, well, I'm waiting to save money. And you can search around to find the information, or you can hit your phone and say, look, the state of Maryland has money for you. Let's set an appointment. So the website is mmp.maryland, spelled out, .gov. mmp.maryland, spelled out, .gov. And if you look at this slide, you'll see that if you have someone that may be language challenged, this website converts to other languages. So we talked about that $5,000 program, and we're going to talk about a lot of other programs. And we're going to talk right now about the Maryland Home Credit, which is what I call the icing on the cake. The Maryland Home Credit gives qualified borrowers the opportunity to obtain a mortgage credit certificate that can be used to claim a federal tax credit of 25% of their paid mortgage interest up to a maximum of $2,000 per year. A dollar-for-dollar reduction against the borrower's annual tax liability can be claimed every year for the life of the loan. Well, that's huge, but what does that mean? We have our federal mortgage interest write-off. We realtors treasure that. We fight for it. We won't let them take that away from our buyers. Over the course of a year, whatever they pay in mortgage, the interest, that gets as a tax credit, a federal tax credit. But if they purchase this Maryland Home Credit at settlement, they would get the first 25%, $2,000 per year, a credit. The other 75% would come back as their regular deduction. A Maryland Home Credit can be used with a Maryland Mortgage Program loan, with a purchase loan to a participating lender. It cannot be purchased by itself for an existing loan or purchased after closing. Remember that approved lender that will be doing that first trust? When they lock in that first trust, when they reserve that first trust, they will be reserving this Maryland Home Credit at the same time. Cannot be done before, cannot be done afterwards. Has to be done before, and it has to be done through one of the approved lenders. The Maryland Home Credit is claimed on the borrower's federal tax return using IRS Form 8396. The home credit comes, it's called a certificate, but it actually comes in form of a closing doc. What I suggest you do is put a little note on that for your borrower so that at tax time they know that they can submit this with this IRS Form 8396 to get that $2,000 credit. If you, what I always say to do, I want you to suggest to your buyers that you get this, that you may be able to get this in down payment and closing cost assistance for them, because you can call them at tax time and say, by the way, remember that Maryland Home Credit that you get that tax credit. I didn't want you to forget about it. Remember that. I put a little star on it. Do you know anybody that wants to buy or sell? The remainder of the annual paid mortgage interest can be claimed as a regular deduction. A Maryland Home Credit can be used with a Maryland Mortgage Program loan, with a purchase loan to a participating lender. It cannot be purchased by itself for an existing loan or purchased after closing. Has to be done at that time when they lock in that loan. It gives qualified borrowers the opportunity to obtain a mortgage credit certificate that can be used to claim. Did we go back? I think we went back. Hold on, sorry. The amount claimed on the borrower's federal tax return varies based on the size of the loan and the interest rate. An average MMP borrower can claim $1,300 to $1,600 the first year. Savings for the life of a 30-year loan would be approximately $28,000. That's huge to a first-time home buyer. That's huge to any buyer. It gives them the opportunity to have a little cushion. If a hot water heater breaks or blows up, instead of charging that hot water heater, they would have a little bit of money, so maybe they could pay cash for it. When calculating the debt-to-income ratio for a borrower who is getting a Maryland Home Credit, the credit can be added to the income, not subtracted from the debt. What the heck does that mean? Say your lender, your approved lender, comes to you and says, the debt-to-income is a little off. We need to adjust this debt-to-income some way. They may have to pay off of debt, which is something realtors never want to hear. None of us want to hear that. Take that $2,000 that they get from this Maryland Home Credit and you can add it to their income, which makes it a little, it adjusts that DTI. It's a big help. I have more lenders calling me on that. It's not free. Fees vary according to the lender. For a Maryland Home Credit obtained with an MMP loan for a reissue of an existing MMC, it is $450 to CDA and $350 to the lender, unless waived. For a Maryland Home Credit obtained with a non-MMP loan, meaning they go through an approved lender, but they are not using any of our MMP products, it is $1,100 CDA and $700 to the lender. Not free, but you'll see that it pays for itself the first year. So you'll see this dual tracking product line. We're going to talk about the products now. This dual tracking product line is huge for us. Remember, they just had that $5,000 and then they got a couple other products. But under this dual tracking product line, it really helps not only first-time home buyers, but this flex products can be done for repeat home buyers. The first-time advantage products are for first-time home buyers only, and they cannot get that Maryland Home Credit. The flex products can be repeat or first-time home buyers. If they are first-time home buyers, they can get that Maryland Home Credit. So this is a lot of products. There's grant products in there, a lot of good stuff. I'm going to go over the first-time advantage products first. The first-time advantage direct would be the product they would use if they did not need down payment and closing cost assistance. That's the product that is the rock bottom interest rate. We call that the no bells and whistles rock bottom interest rate. That's for your buyer that has their down payment. They may be getting seller assistance on that, but they just need more bang for their buck. They would use that first-time advantage direct. The first time advantage $5,000, remember that payback bucket? That's that $5,000 in that payback bucket. Remember with that product, they can use the partner match with that. So Maryland will match anything that they get from the partners up to $2,500. They can still use seller concessions with that. They can still use jurisdictional money with that. What I call our money maker is that first time advantage 3% loan. That 3% is in that 0% interest loan bucket, does not get paid back till that product is sold, that property is sold, refinanced, or the loan is closed out. That's your money maker. That's a rock bottom interest rate. Yes, they have to pay that back, that 3%, but they don't really care because what are they getting? They're getting today's interest rate and today's house prices. Huge. That's a biggie. As they do, I'm going to show you another product that they can add on top of that. First time advantage, those products we just talked about, that is the lowest MMP rate available. They cannot get that Maryland home credit, but they must be a first-time home buyer. We went through these first-time advantage 5,000. The flex products are Flex Direct. That would be a low interest rate. That is for first-time or repeat buyers. That Flex 5,000, again, that is the 5,000, and that can use with that partner match, and that $5,000 is in that payback bucket. Flex 3%, you want to put a little star next to that one. That's a low interest rate. That 3% down payment and closing cost assistance is payback. But they do not have to be a down payment. They do not have to be a first-time home buyer on these. Flex 3% grant and 4% grant. When I say grant, what does that mean? They do not have to pay those back. Those grants are forgivable at closing. They don't have to stay a certain amount of time. I'm sure they would like you to stay at least 6 months, but they are forgiven right there. The difference between the payback and the grant product is, yes, the interest rate is a little bit higher on those grant products. All Flex products can be layered with Maryland Home Credit mortgage certificates, but then they have to be a first-time home buyer to use the full package. Again, Flex Direct, lowest interest rate, they can still get the Maryland Home Credit. If they're not getting a Maryland Home Credit, they do not need to be a first-time home buyer. These are the Flex 5,000, down payment and closing costs. Maryland Home Credits are available. Partner match is available. It's a 0% interest loan. 3% DPA, 0% deferred loan, lowest interest rate. These are still low interest rate on all of those, and they can be a repeat or first-time home buyer. You have a 3% grant and a 4% grant. And we had the 4% grant that kicked off, and that was a huge success. And they gave a 3% grant now. The special assistance grant we're going to talk about on slide 35. This is a conventional product. Remember all the products that I've spoken about? You can do VA, FHA, USDA, and conventional loan products. All of those products, well, this special assistance grant is income generated. With that income, if they're doing a conventional loan with any of those products, it's possible they could get another $1,500 or another $2,500 additional assistance depending on their income. Remember, that is a conventional product only. Homeability used to be done in-house with the Department of Housing. It has been now gone out to the top-tier lenders. Homeability is our disability product. I am asked weekly, do we have a disability product? And yes, we do. And yes, it is easily accessed through the lenders. For first-time home buyers with disabilities, 80% of the purchase price for the first lien, 25% of the price in a 0% lien for down payment and closing costs. No mortgage insurance required, special income limits. And you can find that on the website. And the lenders that can do that are our gold and silver lenders. Maryland Credit 640. When you're thinking FHA and you're thinking the Maryland Mortgage Program, if you have a buyer that is between 640 and 659, they would use the Maryland Credit 640. It opens up FHA loans to borrowers with credit scores lower than 660, which has always been our credit score requirement on FHA. Under this credit score 640, they must have 2 months PITI reserves, a 42% maximum GTI, no manual underwriting, and they can be layered with all down payment and closing cost assistance or DPA or MCCs, Maryland Home Credit. Credit worthiness, is everybody with me? Conventional loans up to 97% require a middle credit score of 640 or above. FHA loans require a credit score of 640 for that 640 product or 660 and above on FHA. They do not need that 2 months PITI reserves. Maximum DTI is 50% on conventional Fannie Mae only. Everything else is 45%. FHA 660. Program requirements: must have a valid Social Security number and be eligible to work in the United States. Citizenship of the United States is not required to obtain a CDA loan. Everyone on the loan must live in the home, no co-signers. Everyone that lives in the home does not have to be on the loan, though. Borrowers may be single or married. If married, both spouses are not required to apply, but will be included in the household income calculation. If they say they're separated, they would need to provide a separation affidavit. They must intend to occupy the property as a principal residence within 60 days of closing. Always think owner-occupy on all of our products. We do not have investor products. And they cannot own any other property anywhere else at the time of closing. That means anywhere. What is a first-time home buyer under the CDA, under the Maryland Mortgage Program rules? First-time home buyer would be classified as anyone who has not had present ownership in the last 3 years. This is a bigger market than you think it is because over the last several years, people have moved out of the country, into the country, in departments, reorganized their credits, gone back to school, a lot of different things. It used to be a big deal when they were a first-time home buyer. We now have the Flex product that does not make it such a big deal, but there are some benefits to the first-time home buyer product. There are 2 exceptions to that 3-year exception, that 3-year rule. If you have a veteran that maybe they purchased a house and they use FHA or they use conventional, and this time they want to use their VA eligibility, they would be considered a first-time home buyer. The other exception is anyone purchasing in a targeted area. Remember that Maryland does this program all over the state of Maryland, so this is the only time you'll have to worry about this word targeted area. If somebody sold their house yesterday and are purchasing a new home in a targeted area, they would be considered a first-time home buyer. Again, everything has to be done through an approved lender. Maryland Mortgage Program loans or Maryland Home Credits can only be done through an approved lender. Currently, there are about 100 approved lenders, and about 60 of these are approved to do the Maryland Home Credit. New construction must be done in a priority-funded area. When you go to that website, mmp.maryland.gov, and you go to the search bar, you can go to Mapper. If you go to that Mapper, you can bring it up and you can put any address in there, and they will come up, whether it is in a priority-funded area, targeted area, or USDA area. These are synced with all the other state agencies. If you think by any means that the property that is in question may be in one of those areas, and you are questioning what is on the mapper, by all means, please call us. Please email us. There may be an exception to that. It may not have come up on the mapper, but by all means, please do not lose a deal over it. Always let us try to work it out. This is a picture of the mapper and how it would work. If you look on the left side, you'll see how that comes up. Projected income for all household members, including overtime, part-time, and commissions, is used to determine income. Total household income may not exceed the established limits, which differs from jurisdiction and household. Remember, these household incomes are by jurisdiction. It is on our website what they would be. If a son, a child lives in that house that is over 18 and not a full-time student, remember they are going to use that income. Make sure that CDA knows maybe that son won't be living there, but you want to make it clear to CDA what it is so it doesn't throw you over the income. There's one example of the income, and that is, this whole example is on the website. So in Allegheny County, 1 or 2 people would be $115,800. 3 people would be $135,100. Certainly not low income. Maximum MMP loan amount is lesser than $484,350, or the insured grantor's maximum mortgage amount. Some counties have a lower limit. Most counties, this is the limit. You might want to check just to make sure that your county is not within the lower limit. But how many of your first-time home buyers really want to go up to $484,350? This is very reasonable. Again, not low income. Borrower's liquid assets may not exceed 20% of the sales purchase price, not including 401k or retirement. Remember that. A guess of equity between the appraised value and the purchase price in a non-arm's length transaction is considered an asset. What does that mean? Say grandma is selling her son her house, and she's giving him part of that house as an inheritance. That would be a non-arm's length transaction, and that would be considered an asset. An asset test is required for borrowers whose assets equal or exceed 20% of the sales purchase price. They will do an asset test on that. Some cases we know do not need it, but they will be doing an asset on that. We know which ones will and which ones won't. Eligible property size. Maximum lot size is 4 acres. For lots greater than 4 acres, as an exception must be required from CDA. No exceptions will be granted for lots over 10 acres. I personally have gotten an exception because the land was landlocked on 3 sides. You want to check to see if that's the case and try to get an exception. We give an exceptions every single day. We make an exceptions every day. Please do not lose loans. Please let us try to help you in any way we can. Eligible housing types: detached, attached, semi-detached, townhomes, modulars, and condominiums. CDA does not do 203K loans, and they do not do mobile homes. Maryland Mortgage Program allows for the FHA anti-flipping policy. Everybody, I'm sure, knows what that is. That is 90 days plus 1 from record. If you have a buyer that is FHA and you take them in and you find a house that's beautiful and has a brand new kitchen and bathroom, it's probably been flipped. So you probably want to go on SCAT and find out when it was recorded. Contracts must be fully ratified prior to reservation. Remember that. CDA reserves the right to cancel any reservation or deny any purchase of the loan if it does not have a fully ratified contract. Why choose conventional loans? I think as realtors we would do conventional loans all the time if we could, but some of our buyers just can't qualify. FHA, you need 3.5% down versus conventional, you only need 3% down. But the MI on conventional is either upfront or monthly, and FHA, it is upfront, monthly, and you die with it. So we'd always do conventional loans if we could, but for the most part, the conventional MMP products, maximum DTI is 50% for Fannie Mae. It aligns with U.S. Bank Fannie Mae. Some products, such as Smart Buy, have stricter standards. But what I want you to know about this conventional loan products with the Maryland Mortgage Program, and I'm going to say it twice. Under the Maryland Mortgage Program, conventional loan product. Under the Maryland Mortgage Program, conventional loan product, the mortgage insurance is reduced by half. And in some cases, that can be up to $2,500 to your buyer. That's a huge amount for your buyer. Here's a slide on that shows exactly what the percentages are on that. So just remember that. If you do any of our products, especially if you do a conventional product, you may be able to stack it with that special assistance grant. You can use our low interest rate products, and they get the MI. So I want you to think about when you're talking about your buyers, look, we may be able to get you either a very low interest rate product with down payment and closing cost assistance. We can get you a tax credit with Maryland Mortgage Program, and we can get you reduced MI. It's huge. If they maybe got into one of the previous programs, maybe the grant program was a little bit higher interest rate, we do have a refi program. It's a conventional program, so the MI is reduced. Mortgage insurers, Arch, Asset, Genworth, Guarantee, National, and Radiant. I'm sure all of you know, the word is out, that there is a great big pot of buyers that cannot purchase homes because they have student debt. Why does this affect them? Because the student debt goes against their DTI and kicks them out of the market. So the governor came to us and helped us because he knew we had this problem, and he used to be a realtor. And we came up with Smart Buy, Maryland Smart Buy. Maryland Smart Buy is huge. It's been modeled over a lot of other states. Our program has been modeled to a lot of other states. When it first came out, we came out with Smart Buy 1.0. Smart Buy 1.0, they could only buy Department of Housing REO properties that have been fully rehabbed. Okay? So it is 15% of the purchase price would go towards their student debt. I'm going to tell you how this lines up in a second. No cap on that student debt. So Smart Buy 2.0, any eligible property in Maryland, they don't have to buy a Department of Housing REO. They can buy any eligible property in Maryland. But that 15%, remember that 15% for student debt, that caps off at $40,000 for student debt. This is how it lines up. Combined borrower student debt must be greater than $1,000 and up to 15% of the home purchase price. Outstanding balance of at least one of the borrower's existing student loans must be paid off fully at closing. Loans must be in the name of borrower for borrower's education, not borrower's children, family, etc. Loan must be current and maybe in repayment or deferred status. Only on Smart Buy is the credit score requirement 680 for obvious reasons. This is a manual underwriting product. This is how this stacks up. You're wondering how this stacks up, and this is how, and this is why it does not go against their DTI. This is a great product. This is a product you should market. I'll show you how to market it, but it is a great product. They would have a first mortgage, a conventional amortized mortgage of 95% of the sales price. This will be handled as a normal MMP loan serviced by U.S. Bank. So remember, they've got a 5% down loan on their first. Remember that 15% towards their student debt? That is a second mortgage, a forgivable loan of up to 15% of the purchase price, which will be used to pay off the student debt. This is a 0% deferred loan with no payments, forgivable over 5 years at 20% per year. The balance becomes due if they do not stay the 5 years. So if they only stayed 4 years, they would owe 20% of that student debt. If they are eligible for $40,000 in student debt and they owe $45,000 in student debt, they would have to bring that to the table in forms of a grant or a gift from a family member. The only other product they can use with this product for down payment and closing cost assistance, remember that $5,000 bucket? They can use that product. That would be a 0% interest loan on that $5,000, and they can use that for down payment or closing cost assistance. But that's really the only one, and that would go in the third place position until that second was forgiven in 5 years. Borrowers may utilize other funds only if they come in form of grants from third parties, employers, nonprofit, county agencies, etc. No partner match funds are available from CDA. So they can use the partner money with it, but we won't match it. Interest rate is the same as the conventional insured mortgage interest rate offered under the Maryland Mortgage Program loan. This is a special transaction structure and is only available with SmartBuy and cannot be used in conjunction with any other MMP product. So remember you've got that first trust. Remember on SmartBuy 1.0, you have to do a Department of Housing REO. You've got the same opportunity. Those REOs have been rehabbed. You can go on the website, mmp.maryland.gov/smartbuy, and you can see where those REOs are. You can also see where the SmartBuy lenders are. If you do SmartBuy 2.0, remember you can buy any eligible property. The same $15,000 would go towards that second trust, towards that student debt. But on SmartBuy 2.0, it caps off at $40,000. So, great product. If you look at this slide, you'll see an example of how it stacks up. Sales price $200,000, lien amount $190, must bring a minimum of 10. Student loan $30,000 on this one. This is the website you go to look it up, mmp.maryland.gov/smartbuy. I always think it's a good idea just if you have a couple minutes to go in there and look at those REOs, because something about when we go look at open houses or we go look at these REOs, somebody comes our path and we go, I remember, I got a house for you. I have a house for you. So if you get a chance, just go in there and peruse it and get a little bit of backup. When you go onto that website, I always suggest that you go into that website and you submit, you go up there and subscribe to the interest rates. Because as soon as you start talking about these products, what's the first product question they ask you? What are the interest rates? It'll be in your email and you can just pop it up for them and say, these are the interest rates for today. You would go into that professional portal and that's where you would see a lot of the information you need. You would see fact sheets and collateral. You want to pull those up so that you can copy those. I would not do an open house without having a couple of those fact sheets in there, because about 80% of your open house people are looking for cookies and decorator ideas because they don't have money. And you can show them that they can purchase a house now without a lot of money. Marketing tools and interest rate. There's the interest rate right there that you would be subscribing to. And you also would drop down and you would go into special initiatives and you would subscribe to their special initiatives. So if something new came out, it would come right into your email. Marketing tools is, again, where you would get the fact sheets, collateral, and there's also marketing tools in there that you could upload to your newsletter, Facebook, Instagram, a lot of things that you can do with it. Use these free tools. We get calls every day for somebody wanting our money for stuff that does not work. Try to use these free things. I guarantee it'll pay off in the long run. A lot of you have had me to your office and you see the kits that we hand out. If you're doing something with buyers or anything, you can go on and you can order these kits and they will be mailed to you. It's a great tool. Remember that I go all over the state and train realtors on these programs. If ever you need me to come out, I'm happy to do it. I go every single day. I love being out with you guys. I love training. I think we're the only mortgage program that has training for both lenders and realtors. We have 2 full-time staff members that goes to every lender that is an approved lender, and they have to be trained, and their process has to be trained. And of course, I go out and help the realtors. This is my contact. By all means, if you ever need anything, please email me. Call me if you need to call me. Lots of times I am on a floor somewhere doing the presentation. Email me as soon as I get in the car. I look at my phone and I answer my emails to try to help whoever I need to help. Do we have questions? Hello?
Hi there, Terry.
Hello,
we do have a question. Are there options for other than 30-year terms?
No, not at this point.
Okay, another question. I just had a situation with CDA Smart Buy with a preferred lender that rescored the borrower due to erroneous reporting on the credit report, and the U.S. Bank did not allow the rescore. The lender was not aware of this guideline. It was very unclear, and MMP did not have an issue with the rescore. Please advise or address this.
Well, U.S. Bank is our final servicer, and sometimes you might want to have to go to U.S. Bank and talk to their guidelines and see why. It's hard for me to answer that question and see what we had to do. You know, U.S. Bank is our final servicer, but sometimes if you go to either Carl Metzger or you can go to U.S. Bank and find out if there what there is or what you can do to fix that. I don't know why they'd have a problem with it, but I can't really answer for U.S. Bank, obviously. I apologize. I just can't answer for U.S. Bank.
Okay, another question is, I understand from the presentation that if the home buyer is qualifying and buying the house based on their income, but to qualify for the programs, all occupants' incomes must be considered. So this might disqualify the buyer from using the program?
Well, it is household income. The household income in almost every jurisdiction is substantially over $100,000. So although it's not low income, it is for, medium income. So yes, it is for household income, and yes, it would disqualify them if they were over that amount.
Okay, does this apply to parents who are co-signing or the guarantor for the child's college debt?
Are you still talking about Smart Buy? Are you talking about Smart Buy?
This is just a question. Does this apply to parents? Does this apply to parents who are co-signing or the guarantor for their child's college debt?
I guess she's talking about Smart Buy. Smart Buy must be in the purchaser's name, not in family members. So it has to be in the borrower's name. You're talking about the loan. The loan would have to be in the borrower's name for Smart Buy. I think that's what you're talking about, Smart Buy.
Okay, are these slides going to be available to our viewers after this presentation?
Yes, they are on the website. They're on the MMP website. Yes.
Okay. Okay, wonderful.
Anything else?
Not at this time.
Everyone, thank you so much for coming in. Thank you so much for letting me speak this morning. I'm very grateful. I'm always here for you. I'll come out to your office anytime you need me. I'm doing the HOC series. That is a huge series, so if you get a chance, by all means. But anytime I can help you or come out and visit, please let me know. Thank you all.
Thank you, Terry.
Have a great day.
You too.